By the Fed raising interest rates the way they have done, basically, it's already caused, I'd say, moderate stress on the banking system, okay? Now, we've seen this play out with some of the banks already, SVB and a few of the others that went under, obviously, back in the springtime, right? But if we have a few scenarios happen, we're going to go from moderate stress on the banking system, where most banks can withstand the stress that's on them, to a situation where it could get far worse, far faster, okay? With the Fed having rates where they're at right now, right, and the Fed lags eventually catching up with us, if we see unemployment going up in any substantial way, and the amount of loans not being paid go up in any substantial way, which we're already getting indications that credit losses are starting to go up substantially. If you look at any of that sort of data, it's already getting pretty worrisome about, kind of where we're at with credit losses and that whole movement as well. So we're already getting the early signs that there could be some weakness there, and that's even with an unemployment rate in the 3s. If we have an unemployment rate go to the 5s or the 7s or the 9s, oh boy, okay, loans will start not being paid back in a massive way. I'm talking auto loans, I'm talking credit cards, I'm talking all that stuff, right? If that's a phenomenon that plays out, obviously you're going to go either to high stress in the banking system or max stress, right? Max stress was what we had in 08, 09, where you had literally everything being problematic, from auto loans to obviously mortgages and what happened with the housing crisis. I mean, credit cards, it was a max level mess. There's a potential we could avoid a max level stress test on the banking system and maybe just have high stress. If we have high stress, we're still going to have a lot more banks go under. I mean, a lot more. But it won't be as severe as what we had in 08, 09, where it seems like it's decimating almost every bank and you need just a ridiculous amount of bailouts we had during that era, okay? So do keep that in mind. If unemployment goes up in any substantial way and these loans start to not be paid back, I'm telling you, we're going to go to high to potentially max stress in the banking system. That's going to be very bad. And the reason that's going to be very bad is that leads to a problem that's called credit crunch. When you have a credit crunch, you're screwed. That's the best way to put it. You're screwed, okay? Because here's the bottom line. The U.S. economy is run on credit, okay? How do you think people are buying all these cars? You think they're buying them with cash? No. How do you think people are buying all these homes? You think they buy them cash? No. They're buying them on debt. How do you think people pay for most stuff? Credit cards, right? So if you have any sort of credit crunch, when a company goes to, let's say, have some sort of big infrastructure project for their company and spend a bunch of money, what do you think a company usually does? They take out a loan from a bank, right? To go basically make that deal happen. If they're going to buy out another company, they're going to finance it usually, right? Refinancing a debt as well. If you have a credit crunch, you have a mess. And it's the worst thing that can possibly happen in the U.S. economy is a credit crunch. If all of a sudden that person that usually could get that auto loan can't get that auto loan anymore, you got a problem. If the family that wanted to go buy a house can't buy a house because we're in a credit crunch, it's a problem, okay? If the person that had $10,000 credit card limit goes down to a $1,000 credit card limit, we got a problem. It might be healthier stuff long term, but in the short term, that's devastating because that just means far less spend. Far less spend means far less jobs mean more far less jobs mean company earnings worse. Company earnings worse mean lower valuations. It's all dominoes, folks. It's all dominoes. And so if we get into any sort of credit crunch, you better believe the market is going to be nasty if we get in that situation. That's not a guarantee. In order to have a major credit crunch, you're going to need max level stress on the banking system, something similar to what we had in 08, 09, to get a real, true, massive credit crunch. You could have a minor credit crunch if we have just kind of high stress in the banking system, and that would still hurt the economy, and that would still hurt the stock market and earnings in general, but it wouldn't be what seemed like end of the world type credit crunch like we had in 08, 09, okay? Tesla Maesla. So Tesla Maesla has done us absolutely tremendous. We're up 969% on that one, up $380,000, right? This is the second biggest position in the portfolio overall, right? Tesla, let's call it the way it is. They're going through a very tough time short term. And when I take tough time short term, it's just their growth rates are held back, okay? Not a tough time as in other tough times other companies have to go through where their revenues are going down and their business is a complete disaster. For Tesla, all it is a story of margins are getting hit short term. They've had to do a lot of price adjustments and interest rates are working against them in a massive way, right? So Tesla's still a phenomenal volume grower, still a phenomenal revenue grower, right? But in the short term, margins are getting hit, profitability is going to get hit. We all know that, right? So you have to kind of take Tesla apart from what's going on short term versus what's going on long term with EVs, the EV revolution, obviously, the electric charging supercharger network, obviously on the AI side when it comes to self-driving vehicles, and Tesla's just in front of all those major technology shifts right now, right? Now, in regards to Tesla, am I planning on selling, buying the stock? So, in regards to Tesla, I can't buy the stock right now. The stock trades at about a 72 times this year's numbers, 2023, right? And at the beginning of this year, I actually was buying Tesla stock, but that was when the stock was less than half of its current price, right? So I was buying it based upon like 30-ish or 30 something this year's numbers, basically, right? Well, that's very, very attractive. At 72 times this year's numbers, I'm a little more wary of that, right? And so I'm very well aware of several different things that are holding Tesla back in the short term. We obviously talked about. I also am actually concerned about the Robotaxi network. A lot of people are predicting that's going to be a huge profit generator right from the go. I'm not so sure of that. I think that could actually be a holdback for the first couple of years of ramping that. Very rarely you can ever launch a business and right away it's making money. I wouldn't be surprised if Tesla loses money initially from the Robotaxi fleet as they get that out there, whenever that happens, right? Which they're going to have to go through major legal processes across many different states and cities and countries if they want to have it in multi-countries, right? So when I look at Tesla, very certain about the long term of Tesla and confident. I'm a little more concerned about the short term in regards to Tesla, right? And when you have a lot of concerns for the next year or two, and the company's trading at 72 times this year's numbers, right? It's not the most attractive buying opportunity out there. If Tesla, once again, was trading at 20 or 30 times, it's a whole different ballgame, right? And that's what Tesla was trading at the beginning of this year. So the risk-reward profile in Tesla is just not nearly as attractive now as it was at the beginning of this year. And that's something we're obviously having to deal with. The one really, really exciting positive in the short term, well, there's really two. One is Model 3 refresh, right? That's exciting, short term. We'll see what that produces for numbers, but it's exciting. And the other exciting thing is Cybertruck, okay? So, yeah, Tesla, always a difficult one to kind of value this company and try to figure out, like, is it a good deal, bad deal, an okay deal, things like that. And right now, there's a lot of stocks tugging at me right now to buy them, right? And so when I'm up so heavily on Tesla and the valuation's like, kind of where I'm at with Tesla. Now, on the flip side, if you haven't built a position Tesla, I could understand folks buying it out there, okay? I hope you guys enjoyed today's video. As always, I appreciate y'all joining me. And yeah, I'm looking forward to continue to build this portfolio. I hope it's, eventually going to be a $3 million portfolio, $5 million, $10 million, and we'll go from there. So appreciate y'all joining me. If you're looking to apply to join my private group, see the moves I'm making in the market, see exactly how I build a portfolio, learn everything I got up here, get access to my hundreds of videos teaching you everything I know on how to build portfolios, pick stocks, all that good stuff, then check out the pinned comment down there. You can fill out an application. We see if you're a good fit. Join us in there. Get part of the private group's Discord chat with the 6- and 7-figure members and all that good stuff. Much love as always, and have a great day.